Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A second bullish white soldier yesterday and a suitable follow-on higher to the previous session's key reversal up. It was also the highest close since late June, and a second consecutive close over the significant February and March 2017 lows at 104.92. Prices are now moving away from the top of the previously influential upper time, currently 104.26, of the broken January to May 2021 bearish Andrews pitchfork, which increases the questions about its future. You see, I would normally retire such a pitchfork after two consecutive closes over or under it, but in this case I've made an exception. Not just because of it becoming support, but for two other reasons. Firstly, this pitchfork has been broken many times on the lower time, currently at 96.85, yet each time it has repaired itself. Secondly, because of its long life, over a year and a half now, I think there may be perhaps more to give from this pitchfork, so I'll keep it here for a little while yet. Just below the upper time is the support of the congestion zone 103.38 to 103.69, which currently also contains the long moving average, currently 103.46. Meanwhile, immediately above and acting as a cap on the market yesterday was the April 2017 low at 105.68. Beyond that is the 2020 low at 106.35, then the April 2020 low at 107.25, with the secondary harder to reach target X3 in the 107.65 area. This is the secondary target from the late September to mid-November ascending wedge pattern. This pattern is highlighted in dark blue on my daily chart. One final point, an expansion on something I had previously highlighted. We have a golden cross of the rising short medium moving average, currently 100.72, moving up over the rising medium moving average, currently 100.62. This is a bullish lagging indicator. So far today, a move higher over the April 2017 low and close to this past Monday's highs, though not challenging it as yet. And looking like an indecisive doji cross right now. Cable, aka sterling against the US dollar. A second bullish white soldier yesterday and a follow-on higher from the previous session's bullish engulfing pattern. Yesterday, the base of the action was this time the Fibonacci and other congestion at 121.5, with the cap on the market being the June 2020 low at 122.48. A little lower we have support from declining long moving average, currently 121.09, then the May 2020 low at 120.73, though I'm dubious on how good this is. And then we have the rising upper trend line, currently at 119.5 of the late September to late November ascending wedge pattern. I've highlighted the relevant trend lines of this pattern in dark blue to help visualize what is going on. Overhead, we still have the primary and secondary targets for this ascending wedge pattern. The primary target X2 is in the 124.20 area, and the secondary harder to reach target X3 is in the 128 even area. So far today, well, not much. A small move up over the June 2020 low, but then back down to hold on it, and looking like a possible indecisive spinning top right now. Euro sterling. An immediate countering bullish engulfing pattern yesterday, but honestly, that title belies it a little on what was going on. There was once again no substantive difference in outlook than what was seen in the prior 4 sessions. We seem to be undergoing some extensive indecision right now. Below we have the slowly rising long moving average, currently 85.48, whilst above we have the ever so slowly rising medium moving average, currently 86.31. Though the medium moving average overhead has been breached all this week, we so far have still not had a close over it, though yesterday came very close to it. Further up we have the April 2020 low at 86.69, but I suspect the lesser Fibonacci resistance higher up at 86.98 that doubles as the base of the old roof pattern from November is probably better resistance. When we're below the long moving average, we have the April 2021 low at 84.70 and the March to date uptrend currently at 84.58. Finally, I do note how we have had higher lows since the middle of last week, usually a sign of a building bullish incentive. So far today, a lower open and yet again a testing and piercing ever so slightly of the overhead medium moving average, but it is also again a cautious move higher, and prices have since pulled back. The next overhead will be the April 2020 low at 86.69, and right now we're looking like an indecisive doji cross. US dollar against the Indian rupee. Okay, an interesting pattern yesterday. It can be seen as an inverted hammer and possibly as a gravestone doji. The gravestone doji is simple. It is a bearish pattern. The inverted hammer is more complicated. It is traditionally seen as a bullish reversal pattern, but data indicates that close to 7 out of 10 times it acts as a bearish continuation pattern. All this is happening after the previous session's interesting reactionary bearish harami that could also be seen as a shooting star pattern, type 1 bearish. This comes after the market recently rose up and was rejected by the overhead middle tine of the mid-September to mid-November bullish shift pitch. You can see the ties highlighted in bright red on my daily chart. Below, we now have some interesting support from the open and close area around the 81.90 area, plus the rising short medium moving average, which is nearby 81.91, and some earlier congestion around there as well. So far today, a small hike and a dip lower, which eventually led us to where we originally started, and is making today look like an indecisive, well, if lower, indecisive spinning top. US dollar against the Brazilian real. A bullish harami, if only just yesterday. The main body of action was caught between an immediate support and resistance, though the tongue and tail were slightly outside. The support was the lesser Fibonacci line at 520.27, with possibly the low of the session supported by congestion late last week in the 518.5 area. Meanwhile, the resistance was a combination of a good-looking 50% Fibonacci line of the March 2021 to April 2022 move at 522.76, plus the medium moving average, currently 522.63. The tongue extended some distance higher in a fairly free zone overhead, but shied away from testing the combination of short medium moving average, currently at 526.92, and a not so good looking 50% Fibonacci line of the May 2020 to April 2022 move at 527.37. Looking at this chart, I am starting to have doubts about the late June, late September mildly bearish shift pitchfork. I will ponder and discuss this some more, I think. Well, this neither helps nor hinders last week's weekly key reversal down and the outside month made here in November. US dollar against the Mexican peso. A second bearish black crow yesterday, and the reason will follow on lower to the previous session's interesting bearish engulfing pattern. It was the second consecutive close back below the combination of the declining short medium moving average, currently at 19.8895, the April 2022 low at 19.7168, and the middle tine of the March to May bearish shift pitchfork, currently at 19.6779, the one highlighted in dark blue on my daily chart. What was interesting about the move lower was how it pierced and closed below the light congestion from the start of November between 1962.5 to 1965, and managed to make some inroads into the early June congestion between 1956 to 1964. Overall, from Friday until this past Tuesday, the market has recovered in two sessions. Well, let's expand that a little to, say, last week and early this week. In that time, the market has recovered most, if not all, of the declines, the grinding declines, seen throughout November. This has gotten me pondering as to whether the action since late September, including the time crossover seen in late October, may be, just maybe, a possible bump and run reversal bottom. I need to think some more on this. So far today, a reactionary move back up with a slightly higher open and a move up over the middle time, though shying short of testing the April 2022 low and the short medium moving average. Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.